Okay, this is the daily money-making setups on the Emini using the process trading non-correlated indicators for June 13th and using the 1500 tick bar chart. And the first half of the day was not a very robust day at all. We see that the day started out right over here, right in this area, and it just bounced around the VWAP. Now, this VWAP line here also serves as support and resistance, and it also serves as a regression to the mean line, which we'll talk about in a minute. But basically, from a support and resistance standpoint, we can see that nothing much was really going on from 9:30 clear up until the noon time frame. Price goes up a little, goes down a little, goes up, comes back down, goes up, comes back down, hits support. So really, there wasn't that much trading opportunity. You want to get into trades when it appears that there's going to be some sort of a run or some sort of a trend. There's some indication as to what's going on. Well, you actually don't get that indication here of anything going on. Now remember, there's three types of traders that are depicted here. You have the professionals, which are the blue bars, the less skilled traders, which are the yellow bars, and then there's everybody else, the high frequency traders, the market makers, etc., that are all the other bars. So on days like today, when there's not much going on in volatility, and we see that especially down here in the short-term trend oscillator. The short-term trend oscillator in pre-market, the unique thing about the short-term trend oscillator is that the high and the low of the oscillator will vary in their width and form a channel that is representative of volatility. And you can see, even though the movement here was just kind of lateral and congested, still there was some volatility to it. But as that continues, we see the lower bound start to edge up here, the magenta line, and now the bands start to narrow, and it forms a more narrow channel until it gets over here into the 10 o'clock time frame, and we see right here that the volatility is narrowing significantly. So these are not times that, especially for day traders, that interest us a whole lot. Volatility is much better than no volatility for the day trader. So in fact, if these channels compress just a little bit more, the cyan and magenta line themselves would turn yellow, and that is representative of not enough volatility to even consider trading. You can consider trading here, but you do it on a very discretionary basis using your discretionary indicators here, the Intergy, the Cinnamon oscillator, and the short-term trend oscillator, along with the price bars. So everything is very discretionary up till this point. Now, this narrow channel continues on, and one of the things we can do when the indicators themselves are not reacting to volatility, and let's move this over a little bit now. So we get over here to the 1220, around the 1230 time frame, and two significant things happen. We saw that the professional traders, they moved along kind of linearly, and right here we see it's a little higher than the stop exit line. That's this dashed line. And then over here, the next one is moving laterally, and then it moves down a little bit. And then we look at these three professional bars right here, and this one dips below the stop exit line, which turned red right there, and also the professional bars then not only went below the stop exit line, but they went below the support line. So that's and with their, if you took them in a slope, they're sloping down. Now the professional traders don't make price fall, but the professional traders, the reason that makes them professional is that they know which way the market is heading, and that's how they make their money, and that's why we follow them. So this is going down. This gives us the first good indication here of really what is taking place on the inside in the markets. Then when we look at the discretionary indicators down here, the cinnamon oscillator, we see that momentum now is breaking through the upper bound, and it's breaking through the cinnamon line. The cinnamon line also is a conviction type line. So we know that the conviction of this lateral movement is coming out. Up to that point, let's move back a second here. Up to that point, the sentiment had all been in the upper half of the cinnamon oscillator, which still shows, even though it's vacillating around the support line, that the sentiment of how price wants to go and of the trading community is still positive, because it's still in the upper half of the sentiment oscillator. But when it gets right down to this point here, and we'll move back now a little bit. So when it gets right to this point, we saw that that started to change a little bit, just like this sentiment here was dropping down, sloping down. Well, now this sentiment starts to slope down. It starts right here. It gets recognized right here. So it's a very leading type of indicator. And then we see that the professionals are in agreement with that. And price, in fact, does continue to fall. And right at this point, now the sentiment goes into the negative half of the oscillator, into the bottom half. And that is another sign, especially with it sloping down, that price is going to fall, because we know that the sentiment oscillator, the nature of it is to go from the upper bound to the lower bound to the upper bound to the lower bound. And all we have to know then is when that's going to happen and how it's being traded, of which our other indicators tell us. So at this point here, what we saw is a large professional bar to the downside, severely crossing the stop exit line, and we saw two timing dots on the Intergy. Up to this point, we had seen Intergy with the green demand come in, and then demand fall off with weakness in the gray bars. Demand falls off, then demand comes back in, but it doesn't come back in heavily. It just goes up a little bit, and then demand falls off. And so they're testing the market to see, well, they'll go up to this point to see if anybody else, wouldn't matter whether it's professional or otherwise, is going to take it up or not. Well, we see at this point here, demand is coming in, then it falls off, and now we see supply coming in. So now we're starting to see which way that it's going to go, and we get two trend alert dots here. We can't tell from the Intergy indicator exactly which way it's going to trend, which way price is going to trend, but this professional bar gives us a clue, as does the slope of the sentiment oscillator, as does the short-term trend. Now, the sentiment oscillator, the momentum started changing radically to the downside way back at this point, way back here. So we were looking for it to go short. Demand fell off, and then supply started to come in. when that supply started to come in, we look at the sentiment oscillator, and that went below the lower bound of the oscillator. So now we know that the short-term trend is cutting down below the bottom of the short-term trend oscillator, and it is sloping down as well. At this point, we also see that the volatility is picking up because the channel is widening. It was here, now it's widening a little bit, and over here it widens even more. So we know that this volatility is to the downside now. So, and at this point, as we pointed out, that's where we had the sentiment and conviction crossing from the positive upper half of the sentiment oscillator to the lower half and heading down by its nature, going from the upper bound to the lower bound. So right here on this yellow bar here, we see less skilled traders thinking, okay, so now there's going to be this reaction. So it's went above, and now it's going to go back up there above. Well, it doesn't do that. This is a support and resistance line as well. So you can see it hits resistance, and that's all there is. And then it continues down. So now we knew that those over here, we knew that these trend dots were going to trend to the downside, and we saw that with supply coming in right here. So now what we're looking at is where is this professional bars going to end? And in any trending situation, that's what we're looking for. When are the professional bars going to change? So we see it here progressively going down, going down, going down, going much more down. And then we saw a reaction from the less skilled traders, and they got flushed out, and it continues, price continues to go down. There's a slight reaction here, and then again, we see the less skilled traders thinking, oh, well, this is now heading back up. But of course, they got in right at the top there, and now it's going down again. So we see the blue professional bars, and now we have another blue professional bars below the stop exit line, and again here and here and here, until we get down to the contraband. The contraband is these two bands here, this white band above and this white band below. Well, the contraband is where you can take a contrarian trade as long as price is touching the contraband if you follow the process trading trade management rules for taking a contrarian trade. Well, the other thing that we know about the contrabands is that the support line here, it's the process trading VWAP line. So it could be gray or it could be yellow, and we know that that is part of the trend trading mechanisms. And we know that there's three types of trades you can take. You can take a trend trade using the VWAP and the timing alert dots and the trade management rules associated with it. Or you can take a discretionary trade, or you can take a counter trend trade if price hits the contrabands. The thing that we also know about the VWAP is that it acts as support and resistance, as we saw earlier in the day. And the third thing the VWAP serves at with processtrading.com is that it is a regression to the mean line. And price is going to regress back to this mean from the contrarian position, because it'll hit the contraband right here and price will go below it and then regress to the mean, or it'll hit it and then regress to the mean, just like it did here. So price hit it and then it regressed to the mean and actually back up above the mean a little bit. At that point, when it regressed to the mean here, now this again serves as support and resistance. So price then broke through support. And again, we see a blue professional bar here, and we see a less skilled trading bar right here. So this less skilled trading bar actually is telling us that these traders, again, are getting caught thinking price is going to go up. And if we look at the Intergy here, we see how price works. Demand comes in with the green bars here, and then demand falls off. There's a weakness in demand, and demand falls off until no supply came in, until demand ramps back up, and here's a fresh wave of buyers to come into the market. And there's only so many of them, and then demand falls off, and it becomes weak again here, where the demand is weakening or there's no demand. Well, at this point here, then, we see that the demand is coming down and starting to slope down, and over here we have our first sign of weakness where demand is completely falling off. Also, we saw parallel professional bars. Now, this one was above, but right here, this professional bar falls below the stop exit line, and it has two timing alert dots that are telling us that, trend alert dots. This is a timing alert dot. These are trend alert dots telling us that the trend is going to happen. We don't know which way that trend is going to happen, so we have to look to our sentiment oscillator and see what is happening with momentum and conviction. Well, we see that the momentum is cutting down through the sentiment oscillators. And that's why these indicators all work so well together, because none of them are duplicating the information. They're all giving us information in a different fashion. And in fact, the Intergy indicator, which stands for internal energy, is a proxy for volume. So we don't see a one-to-one, we don't see the exact volume bars, but we know what's happening within that volume, and we know when the trader community is bought in and when it's getting exhausted, and when demand falls off and there is no demand. And then we're looking to see, well, what is this trend going to be? Is that going to be an uptrend or a downtrend? Well, this professional bar here with a downtrend trend dot, two of them, gives us a bias, gives us a clue that this is going to go to the downside. As do these four trend alert dots here tell us these, because they're red, they say to the downside. Now we start looking at the professional bars, and we see this one went below the stop exit line. This one went below the stop exit line. So now we're starting to see the blue bar here, here. Clearly they're starting to slope down. So now we ask ourselves the question again, when are they going to end? If they end prior to the contraband here, it'll tell us down here in the discretionary indicators. But we don't see that. We see the conviction line, again, starting to slope down, breaking through the upper half, which is more positive, through the midline, down to the lower boundaries, which is its nature, to go from the upper bound to the lower bound. It hits that contraband again here. And, of course, that's right at around the 1600. So that's right at the closing bell right there. So we wouldn't be taking any more trades, but what we also expect is this now has went down into the contraband, and contrarian trades, as long as they're structurally set up according to the process trade management structure so that you can manage the trade with low risk and high probability, then a trade we would be watching for. But that is another place where the professional bars could stop, just like they stopped over here at the contraband. They stopped right here at the contraband. If they're going to stop before that, we're going to see it in the Entergy, we're going to see it in the cinnamon oscillator, and we're going to see it in the short-term trend. So none of these discretionary indicators nor the information on the price bar with the stop-exit line and the VWAP and the contrabands, they're all giving us independent information. And when all that independent information signals the same thing, then we know which way to take our trade and how to make it profitable. So that's the reading on the Emini for today, June 13th. And you can get these indicators. Matter of fact, you can try these indicators if you want. You can just go over to, they run in TradeStation. You can go over to processtrading.com. There's some great blogs over there, the Emini Money Minute and the Stock Money Minute. Those are shorter blogs, and also the whole system is detailed over there. And if you want to follow those blogs, just go over to processtrading.com. Down at the bottom, there's a contact form, and just put your email in and leave the comment blogs, and you'll get signed up to receive those blogs. Those blogs don't come out every day, but a couple times a week. And this blog comes out every day. If you want to get this one, you could just hit the subscribe button. But that's how to read the market, especially in the beginning of the day, like today, when it's non-trending. It just looks like there's lateral movement and congestion. There's still a lot of clues as to which way we should take our trades for high probability trades. So that's it for today. I hope your trading went well. Hope it goes well tomorrow, and we'll see you on the next video.